Hey everyone, welcome back to Corporate Decoder. Today, Beyond Air Incorporated just filed an 8K, and I'm seeing a significant shift that investors should understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is changing its fiscal year, and this move might signal more than just a calendar adjustment. Alright, let's dive into Beyond Air's latest filing. This is a current report, meaning it is for significant events that happen between their regular quarterly or annual reports. The key date here is the 25th of June 2026. Which is when the earliest reported event occurred. We're looking at Beyond Air Incorporated, a company operating in the healthcare and medical devices sector. They trade on the Nasdaq under the ticker symbol XAIR. Their market cap is currently around $6 million, with their stock trading at about 50 cents a share. Recent headlines suggest they are seeing strong revenue growth and have a positive outlook for 2027. The company's common stock is registered on the Nasdaq stock market. One of the main points in this filing is related to their financial results. On the 26th of June 2026, Beyond Air put out a press release covering their fiscal quarter and year ending the 31st of March 2026. This is where they share how they performed financially. This press release is attached as an exhibit, and its contents are being included in this report. Think of it as the company officially announcing its latest financial scorecard. Now, here is where things get really interesting. Beyond Air is changing its fiscal year, and normally companies stick to a pattern, often ending their fiscal year in December or March. The board of directors has decided to change their fiscal year, end from the 31st of March to the 31st of December. This change will officially take effect at the end of 2026. This is a pretty substantial shift. Because of this change, they will have a special, shorter reporting period. Instead of a full year, they'll report on a 9-month transition period, from the 1st of April 2026 to the 31st of December 2026. This will be filed on a special form called a 1020. After that, starting in 2027, they'll go back to filing full 12. Month reports ending on the 31st of December each year. Before they file that 9-month report, they will first file their regular annual report for the year ending the 31st of March 2026, and then their quarterly reports for the periods ending the 30th of June 2026 and the 30th of September 2026. This ensures all bases are covered before the big shift. This section deals with Regulation FD, which is all about fair disclosure of information to the public. Essentially, it is saying that the financial results information we talked about earlier is also relevant here. The company is careful to state that by filing this, they aren't admitting that any of the information is material in a way that would have forced them to disclose it outside of Regulation FD. It's a bit of legal protection. This is the part where they list all the attached documents. The main exhibit is that press release from the 26th of June 2026, which contains their financial results. Then there is the interactive data file for the cover page. This is standard for electronic filings. And finally, the signatures. This section confirms that the report has been reviewed and authorized by company officers. It is signed on behalf of Beyond Air Incorporated. The date of the signature is the 26th of June 2026. This signature is from Daniel Moorhead, who holds the title of Chief Financial Officer. So the person in charge of finances is signing off on this report. Now, let's put this into perspective. Changing a fiscal year and isn't just a cosmetic change. It often happens for a reason. Sometimes it is to align better with industry norms, or perhaps to take advantage of certain tax benefits. However, it can also be a sign that a company is preparing for a significant event like a merger, an acquisition, or even a restructuring. Given that Beyond Air is in the healthcare sector and has been discussing growth strategies, this change could be in preparation for something bigger on the horizon. We've seen companies like Bed Bath & Beyond do similar things before major strategic shifts. Historically, about half of microcap companies that make significant changes to their reporting structure end up seeing further volatility or even delisting, so it is definitely something to watch. The immediate impact is that investors will need to get used to a new reporting rhythm with that 9-month transition period being a key focus for understanding the company's immediate financial trajectory. The fact that they are reporting strong revenue growth, as indicated by recent headlines, is positive. However, the shift in fiscal year needs to be monitored closely for any underlying implications. What I'm actually looking for is how this fiscal year change impacts their reporting clarity and if it aligns with their stated growth strategies in the long term. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.